Hi, my name is Natasha Bridgmohan, President and CEO of the BridgGroup of companies. Welcome to the Financial Room. Today, viewers, we're going to be talking about something very interesting. Things that you're probably always wondering, did I do it right? Did I accept the right product? What if I should have gotten something better? How do I know that I got the best? We're going to be talking about, you name it, mortgage rates. Now, there's so many different types of mortgage products that are out there in the Canadian market. How do you know which one is right for you? That's a tough question. First of all, you need to have a really great mortgage broker at your side, educating you and providing you with all the resources and tools you need to make the best educated decision. Today, we're going to talk about a few different types of mortgage rates and products. Let's talk about probably the most simplest one, which is called a fixed mortgage rate. What does that mean? Well, very simple. You get a mortgage, you have a fixed term, which is usually between 1 to 10 years, and it's amortized over 25 to 35 years. If your mortgage is 5% and your term is 5 years and it's amortized over 25 years, that means for the next 60 months, your mortgage payment is fixed. So there is no fluctuation in terms of your mortgage payment. So you have that sound security knowing that every month, on the first of each month, you have the same mortgage payment coming out. Now, fixed mortgage rates can be very attractive, especially in today's market, where you're looking at anywhere between 2.5% for a fixed mortgage product. But let's talk about something that's really hot in the market right now, which is called variable rate mortgages. So variable rate mortgages are usually discounted anywhere from 30 beeps all the way to 1%. What does that mean? Well, very simple. That means you have a mortgage payment. Again, you have a fixed term amortized over a fixed amortization period between 25 to 35 years, but your variable rate is based on prime and the adjustable rate that prime sets. Now, the Bank of Canada can adjust those rates anywhere between 5 to 7 times a year. However, in today's market, variable rates are very attractive. The only downside with variable rates is that if you are a conservative investor who likes to know what's coming in and out of the bank account, variable rates may not be the best product for you. Also, if you're not keen in watching the market, your variable rate can plummet, which is good because you're going to be putting more payment towards your principal, or it can skyrocket, which means you're putting more payments towards your interest rate. Now, that can lead you into some big trouble. You can get to something called negative amortization. What does that mean? What you borrow today, you can owe more than what you borrow today because the rates are in a negative amortization situation. Also, fixed and variable. You're thinking, which one is better for me? Again, I really encourage you to sit down with a financial expert, such as a mortgage broker, and learn about all the pros and cons that you need to know regarding a fixed mortgage versus a variable mortgage. How about HELOCs? Aren't those good? Well, you know, it's a catch-22. It depends what the purpose of the HELOC is for, and if you can manage and budget paying down your mortgage. HELOCs are really good for those who are strapped with income. What does that do? HELOCs give you interest-only payments, which means it reduces your mortgage obligation payment and increases your cash flow. And they come very attractive with really good rates. However, you can fall into a trap if you do not put down any additional payments on top of your interest payments, which means what you borrow today, you can still owe the same tomorrow. Again, there's many different types of mortgage fixed products, variable products, and of course, HELOC, which is a home equity line of credit. I really encourage you to visit our website at www.bridgegroup.ca or contact us at 1-866-553-7467 to speak to one of our qualified experts. Look forward to hearing from you, and again, thank you for joining me today in the Financial Room.